Welcome to another episode of the Doctors Building Wealth podcast. Today, Kenji and I are really excited to have Josh Magnuson joining us. He's our partner at Fastfire Capital, which is our business that really is focused on helping passive investors have access to great deals in an alternative investments and multifamily real estate. And we're going to be having a casual fireside chat. This is going to be a fun, unstructured interview where we talk to Josh about his journey. We talk a little bit about alternative investments. We talk about real estate, and we just have some fun. Welcome, Josh.
Awesome. Thanks, guys. I'm really glad to be here.
So, Josh, can you give us a little bit of background just for our listeners to know a little bit more about you, your journey, how you got into real estate investing?
Yeah, absolutely. So I'm actually a certified registered nurse anesthetist, or CRNA, by training. I wasn't very happy with my career anymore, and it just wasn't the same satisfaction that I had when I had started practice. So I was kind of looking for something different, a different avenue. And about the same time that all that was kind of happening, my wife had actually brought home an invitation to a Zoom for all female physicians, an investing Zoom actually hosted by you and Sunny Smith. And so I was able to sneak onto that Zoom, and I actually heard you, Leti, speak for the first time. And the way that you had presented yourself and kind of presented real estate as a whole for alternative wealth building was just really something that spoke to me. And so as soon as that Zoom concluded, I reached out to you and joined the Zero to Freedom course, kind of your flagship real estate investing course for active real estate. And I took that course. Shortly after that, you guys had started your mastermind group called Empire Builders Pro. And I was fortunate enough actually to end up on a phone call with Kenji after ZTF finished. And Kenji just asked me, now what? What are you going to do with this information? And it was, again, something just kind of drew me to, well, I don't know yet, but you're going to help me figure it out. And I ended up in your guys' mastermind group.
And then you bought your first property too.
Yeah. Shortly after that, I bought my first fourplex in Phoenix, Arizona, which was our first investment property ever. And really, again, I just kind of want to keep coming back to the strength of kind of the community that you guys have created has been so empowering and really helped position me to be successful, certainly with that first fourplex.
Tell us what you were able to accomplish in EB Pro.
Okay, so it's kind of the list is long and getting longer, which is awesome. Anyway, I purchased that first fourplex, renovated, rented, cash flowing, which was awesome. That first year in Empire Builders Pro, actually, we had kind of started, you and Leti had introduced capital raising and what I loved about capital raising too, and I think what a lot of people, investors, everybody reaches this point where they don't have any more capital. And so how do you continue to grow your portfolio and your real estate? And the solution to that problem that you guys introduced to us was capital raising. And so I became active in the capital raising side of things. And actually, throughout the past 2.5 years now, general partner on, over 900 doors for large multifamily buildings. I've been able to invest in multiple different deals passively as well, and then continue to grow my personal portfolio. Most recently closing on an 87 unit in St. Louis, Missouri.
Yeah, that's awesome. And we're tenants in common. We bought that with, I think, 6 other partners, all bought that property together. And so I want all of you guys who are out there who are thinking like, oh, I'm about to buy my first property. Like, where are the possible ways, what else can happen along my journey? You have that opportunity to, buy properties yourself, to buy properties in a group with like tenants in common structure, which is what we often do. But then you have opportunities to raise money and go out and buy any property of any size. That's really the goal of Empire Builders Pro, is to help people do that. And so there's so many options. And you said it so well, Josh, everybody runs out of money. We have gotten very creative every time we run out of money. We've liquidated 401ks. We've done all kinds of creative things, but it's really a great thing to have that ability to raise capital to be able to build your portfolio that way. Now talking about the active investor, which is what we've been talking about so far, but on the other side is also the passive investor, right? And part of why we started Fastfire Capital was to really help passive investors have a trusted person that they could work with, right? Because so many people that we've seen out there who are raising money for properties, we've interacted with a lot of them. And sometimes their intentions are really about themselves. Their focus is themselves. And they're not necessarily thinking about their limited partners on the level that we would like we would personally like them to be thinking about their their passive investors. So we wanted to make an opportunity for people who wanted to be passive investors, whether they were active real estate owners and wanted to add in passive investing to be able to diversify their portfolio outside of their active holdings, or whether they, had gone through our course, for example, and decided, what, I don't really want to build a huge empire. Maybe I'll buy one property, but I really want to focus on being a passive investor. And that's how I want to add real estate into my portfolio. That's really why we started Fast Fire Capital. So talk a little bit about passive investing and how this all fit in, getting involved in Fast Fire Capital as well.
So first and foremost, I think that there's two different paths for real estate investing, right? You either have your active real estate investing where you're the owner of the property outright. You're responsible for, making it work day in, day out, and you assume all of the responsibility of daily management for that property. Alternatively, is the passive route or indoor syndications, which is kind of what we source for our investors on the passive side. And I think that passive investing is one of those things. It's an amazing tool for building wealth, and it gives you all of the advantage of owning real estate without all the headache. And so really, to your point, I think the key is to make sure you're in business with the right people.
Absolutely. Yeah. And again, I think a lot of people will do both.
Yeah.
We personally done both. It's just a question. And actually, I think people shift over time too, right?
Yes.
You may, when you're younger and you're feeling like I really am in the growth phase, you may put majority of your money into buying your own portfolio, building your own portfolio, and maybe a small amount into passive. And then I think as people age and they're like, hey, I want to do less of the work, maybe they're going to do more passives. Right or wrong here. It's just a matter of understanding what fits into your life right now and choosing which piece fits in.
Yeah, I wanted to also bring up that so far we've just been talking about real estate as a passive investment, but there are actually so many other types of investments that you can make passively. So there's different asset classes, right? Not just real estate. There might be private lending. There's a private capital. There's angel investing. There's all these different types of investments. And as I think about it, sure, we've developed the expertise to be active investors, right? But we don't necessarily have the expertise in all those other asset classes like we do with real estate investing. So if I think about if I want to diversify my portfolio into other asset classes, then I'm more likely going to choose passive investing.
Absolutely. Absolutely. And just for all the listeners out there, Fast Fire Capital does a lot with passive investments in real estate. We've done a lot of taking hotels and converting them to multifamily, which has been an amazing opportunity to really increase the value, force appreciation of those buildings. But then we've also done some alternative. And so real estate is an alternative investment. And one thing we like to talk about internally is the average investor, when you look at what they're invested in, is like 95% stock market and like 5% alternative investments. Whereas ultra high net worth individual has like 60% of their investments in alternative investments and then much less in the stock market. So these alternative investments are things like real estate, and real estate definitely is a category that a lot of people who are very wealthy invest in, right? Real estate. But then there's also alternative investments. And, what we've seen is there's not a lot of options and not a lot of discussion in the doctor community or the medical professionals community about alternative investments, things like gold, things like crypto, things like startups, investing in startups. We just did venture capital kind of startup
an angel
round,
yeah.
right? In Fast Fire Capital with like a small group of people. That was really fun. And that's getting those opportunities that not many people are talking about, because in the physician space, it's so much about like put money in the stock market and just sit back and do nothing. So can you talk a little bit about alternative investments and why you like it so much? Because I knew you have definitely a passion for certain types of alternative investments. So you could talk about that too.
Yeah, for sure. I think that balance of net worth, the situation that you were talking about, or how ultra high net worth individuals, they have about,
over 60% of their assets are in alternative investments.
Yeah. And just the visualization of that is actually pretty shocking, actually, when you see, only 5% is alternative investing for classic investors, like most of us out there. And again, I think that we're just kind of conditioned to that, where, the stock market is there. It's kind of what a lot of us know to be an investment, but really don't know how it works or why. And we, by default, just kind of put our money in there. And most notably through a retirement vehicle, like a 401k or a 403b kind of retirement situation. And really, I think that the alternative investments, the key to that is really diversification. And if you can get away, especially now, actually, just these past couple of weeks, how we've seen these wild swings in the stock market, where it's been down, the Dow has been down over 1,000 points in a day. And now all these tariffs and all of this kind of changing economy. And now, most recently, right, credit rating has gone down. So the dollar is in trouble, is kind of what all of this is signaling. And the goal is to not be in something that is so, you don't want all of your assets correlated. You don't want one thing to go wrong and it affects all of your investments across your portfolio. And so the key to that really is diversification and getting into, these alternative asset classes that are not all, if the stock market goes down, everything doesn't go down in one day. Right?
Yeah, absolutely. We've had the benefit of listening to Ray Dalio come and speak to us a number of times in a financial conference that we go to, and he always says, the key to really lasting through tough times is to have 13 to 15 uncorrelated assets in your portfolio. And, what does that mean? Well, that, like you just alluded to, when one asset goes up or down, the other one isn't tied to it. So it may be moving in a different direction. So the stock market, let's say, loses 25%. No big deal. Your real estate's still cash flowing. It's still maintaining its value. And so one of the things that we've been doing the last few years, so I want to back up a little bit and say, when you focus and you go deep and you develop expertise, that's how you really grow your wealth. Mm-hmm. When you have your wealth, you want to protect it. You have to diversify. So this 13 to 15 uncorrelated assets is extreme diversification. And I'm not saying that, all of us should be doing 13 to 15 uncorrelated assets right out of but I think that it's important over time to build some of those assets. At least that's what we've been doing, right? We're not financial advisors. We can't give you advice, but this is what we've been doing is we went real deep with real estate, built our expertise, grew our wealth, and then made sure we've been really protecting that wealth by having all these uncorrelated assets. And so Kenji mentioned private lending. We take some of our retirement accounts and we have them self-directed and we're lending to people in our community who need money for rehabs or whatever. So we're doing that. We have these startups that we're investing in. We have cryptocurrency. We have all these things that we've been building out. So again, if gold goes up, the stock market goes down, we still have some part of our wealth being maintained. And I know you have specific interest in collectibles. So can you talk about that a little bit too? Because I think people might be interested in hearing why you're so passionate about that area.
Yeah. So really particularly focusing in on collectibles, my passion is actually watches. So wristwatches. And it is really just kind of an amazing market. There, for example, a Rolex that you can go in, first of all, to buy a Rolex is kind of a feat within itself. But, you can go in and get your name on a waiting list for this watch. In 2 years, maybe they're going to call your name and the watch will finally come in and you're able to go purchase it. But the amazing thing really about it is that, you can buy these timepieces at suggested or fair market value at retail for X amount of dollars. And literally you walk out the store with it, the secondhand, or what's kind of referred to as the gray market sometimes, but more importantly, the secondhand market. I mean, the value of those watches can double because they're so exclusive, they're so rare, they're so difficult to get your hands on. So really watches has kind of been one of my passions and one of the things I've been trying to learn quite a bit about. And it's an amazing industry within itself. So
and it is important to note, right, that risk, like some things are more risk, have more risk. Some things are going to be a lot more labile, and other things are going to be long-term steady, right? So you really have to understand what you're investing in and understand the upsides and downsides of everything that you're investing in, because all products, different alternative investments have upsides and downsides.
Yeah, absolutely. And you really need to understand what type of collectible will hold its value. Yeah. And it's also a great illustration, I think, of how when the stock market goes down, for example, the value of the collectible likely will stay the same, right? It's a great example of how two things are not correlated at all, And that's the whole idea here, is that when one asset class goes down, you're protected because you have other asset classes that are not correlated, that are not going down, and they may actually even be going the opposite direction. Ideally, they're going up, right? And so I did want to talk about another asset class that is where you are seeing, maybe like you said, value of the dollar going down, but the price of gold and silver going up. So can you talk a little bit about your investing in gold and silver?
Yeah, for sure. Actually, I think I bought my first ounce of gold when it was $1,700. So I think it was like 3 years ago. Current value of gold is about $3,300 an ounce. So, in the past 3 years, the return on that has been amazing. So again, gold is an inherent store of value that is recognized worldwide. So that is what really makes it so amazing, is that, this is something that you could take, here, for example, I live in San Diego, California. I could take it to Amsterdam or Japan or like anywhere in the world, and it's worth X amount of dollars no matter where you are. It's one of those things that is an actual tangible asset as well, which I really appreciate, especially again, going back to the stock market, those insane fluctuations. And really, when you're buying stocks, you're buying a piece of paper that somebody says is worth X amount of dollars, something you don't physically hold, something that you don't physically own. You can't carry that with you per se, versus these precious metals, for example, gold, silver, platinum. Those are tangible assets that you can actually carry with you. And I think that's pretty neat. Pretty neat
Yeah.
place to put some money.
And also assets that are probably never going to go to zero. Just
Yeah.
like real estate, part of the reason I love real estate is because it's a tangible asset, and you have a
Exactly.
property, it should never go to zero. It's got land, it's got a building there. Even if the building burns down, the land still has value, and there's something in that, right, that it can't go away completely. So that's part of real estate for sure. Now, Josh, another thing I wanted to talk about is we've been talking about passive investing and talking about all the different alternatives, but I want to talk about your journey a little bit and joining Fastfire Capital. When we sat down and thought about partners, it was an unanimous decision. So can you talk about how you showed up in the community? Because I want people to hear, sometimes showing up and participating and bringing what you brought, which I'm not going to give it away, is just, it makes such a difference, and it opens up opportunities.
Yeah, it truly was just an amazing journey. Actually, joining your community and being a part of your world has been incredible. When I first started, and especially when I first got to know you guys personally, and became part of Empire Builders Pro, which is a much smaller, more tight knit community. I mean, there's 47 of us currently, and the interaction is a lot more personal, infrequent, and so when I joined that community, the commitment I made to myself really was just to not say no. And that put me in uncomfortable situations where, I didn't know what I was doing. I didn't know if it was the right decision or right direction, but I was just going to do it and see. And so I'm trying to kind of summate that into something, but I guess, to your point, it's just showing up, right? Just being there. When the phone rings, answer it. You never know what that next conversation is going to lead to, or how it's going to change your life. And really, that was what I was committed to within your community. And as a result, it's created incredible returns for me, both personally and professionally.
Yeah, that I've found that to be true too, is just showing up, just having every conversation. There's so many times in a given week that somebody reaches out and is like, hey, can we meet? And they're a business owner, and I don't see the way our business is initially going to synergize, but I never say no. I'm like, yes, let's meet. Let's see what kind of opportunities. Maybe I even talk to them and there's nothing that we could do together, but I know somebody who can help them, right? It's an opportunity to add value to them. Down the road, it might turn into something, who knows? But like, the more people you meet, the more people you know, the more you see what other people are doing, you get ideas, they see who you are. You don't know how they're going to see how you fit in, 2 years down the road. Same idea on the semi-retired MD side with building a bench for employees, actually. I'm always looking to build our bench. I'm always looking for people who really stand out by how they show up. It may even just be a server at a restaurant, right? And they show up and they stand out and they clearly take a lot of pride in their work. And they have a high level of competence and you can see how they carry themselves, that's a person I'm like, hey, gonna get their number and I'm gonna remember down the road, and maybe they fit in some way.
Yeah.
And so you just never know. Say yes. I think your
Yeah.
philosophy of saying yes for a year, putting yourself in uncomfortable situations, because that's what it often does, is you say yes to all kinds of things, you're going to be uncomfortable. There's going to be a lot of new things. There's going to be a lot of uncertainty. There's going to be a lot of changes. But when you show up consistently, people do notice.
Yeah, I do want to say that, the saying yes is definitely one thing, but I think there's a step before that, which is like, you got to kind of position yourself for different opportunities and being asked to join in on something. So I can think of like one of the early capital raises, just being in that position. I know, and again, I don't know exactly how it all kind of happened. It was like, a couple years ago now, but you were also there and participating in a certain way that stood out, right? And so maybe it was actually just like stepping up and volunteering and leading, right? That was something that, obviously, if you're leading or if you're taking part in every activity, showing up to every meeting, but not just showing up, but actually participating too.
Right. And actually delivering on what you say you're going to do.
That's right. And delivering value could be another one, right? I think the other kind of thing that really stood out is when we did the second year signups for EB Pro, like you were like number one, like you were the first one to like be like, yeah, no question, I'm gonna sign up again, right? And so it's just those types of things. It's like, I think it's not just like saying yes, but it's also how you say yes and how you show up. So I think that that's also another element. And maybe some of this is art, but definitely it is something that anybody listening to this can take and possibly use in their own life. And I think that'll position you to be more successful.
Absolutely. That's why I thought it was important to highlight.
For sure.
Okay. Well, Josh, do you have anything else that we didn't ask you about that you think would be important for people to hear in general?
I think the one tool that I really would like every investor to know about, or an amazing lever to pull, is a self-directed IRA. And so many of us, again, are traditionally, putting our money into these 401ks and somebody else is managing them, and you're surrendering control of that money, of those funds, for a period of time. And a self-directed IRA, what that does is it allows you to take back the control of where those funds are going, what they're invested in, and really even what asset classes they're invested in. And so I think a self-directed IRA is an amazing investment tool that a lot of people don't really know about. And at Fast Fire Capital, we actually have preferred self-directed IRA vendors that I would love to connect anybody to. So if they're interested in finding out more about that, please let us know.
Yeah, I really love it as a tool. And, Leti and I, we don't use it for buying rental properties, and Leti will talk a little bit. I can talk a little bit about that, but we have some K money left over from previous employers. And so what I did was I after we left the employer, you can self-direct it and move it to a self-directed account. And so now I'm doing things like private lending, like you mentioned that earlier, also investing passively in some syndications, different asset classes. I'm actually going to go buy gold with it as well. That's something that you and I have been talking about, buy gold and silver with it. And so it really is a great way. And then thinking about the returns, I mean, the returns I'm getting from, let's say, private lending is incredible compared to what I can get in the stock market. And I'm getting it reliably. One of the cool things is that I'm actually lending it to people in our community, right? So other doctors, and if you know anything about doctors, they're really reliable, and they always pay their debts. And so it's been great lending to doctors, getting that good return, and then very reliably as well. And then diversifying. That's been another great thing, because if the stock market goes down, I'm still going to be getting these payments. So that's the nice thing. And so, so it's been a great tool for us with the money that we have in our retirement account, although we're not setting aside any more money in our retirement accounts, but it's money that we had set aside from previous employers.
Yeah, I will kind of say why we haven't used it for direct ownership or buying properties is, a lot of part of why we really want to buy our own properties is to take advantage of those tax benefits. Well, if it's already in a retirement account, you're not going to get to shelter that active income with the tax benefits of buying your own rental properties. So I think it makes a lot of sense for passive investors. And there are a couple other reasons, which I don't think it's worth going in detail during this podcast, but I really think it's a great vehicle for passive investors to be able to not only invest in things like passive real estate, but also alternative investments for sure. Is there anything else, Josh?
Yeah. Lastly, I really just, again, the mission at Fast Fire Capital is to help you grow and protect your wealth. And along those lines of what we spoke about earlier is diversification of where your assets are held is critical. And I know that that can be very overwhelming. It's a daunting task. And really, again, Fast Fire Capital, we want to make that easy for you. We want to educate you and help you grow. So, keep an eye out for our emails, please. You can certainly schedule a call with me anytime. And I'd love to talk you through our current opportunities, our potential our upcoming opportunities as well. And we want to make that diversification process more comfortable.
Yeah, it's such a good point. I think the financial services industry is set up in a way where they're incentivized to get you to put your money into the stock market, but that doesn't make for good diversification, or I don't think it makes for great investing at all, especially if you have all your eggs in one basket. As you said earlier, the typical investor has 95% of their wealth in the stock market, right? And so again, not diversified. I don't think it's a great way to protect your wealth at all. Having lived through the 2008 recession, seeing people who had their money in retirement accounts and stocks, and then they were close to retirement, and the stock market crashed in 2008. And so these are people I literally spoke to, and they were saying, like, I got to work for another 5 years, right? Because the value of my investments dropped so significantly, the value of my net worth dropped. And so, and I think the other point here is that you're right. I don't think it's easy to find information about alternative investments, really good information, right? You talk about all the upsides all day, but really understanding all the downsides of the different investments. We talked about luxury watches. We talked about private lending. We haven't talked about oil and gas, but I can tell you, it sounds good, but there's a lot of potential downsides with oil and gas. So be careful. Land investing, another one, right? Where it's like lots of potential downsides that you may not know about. And so I do think, and the information around those compared to index funds, right? There's tons of information out there about index funds, tons of educational materials, but the volume of educational materials on the downsides of land investing and oil and gas are very, very few. Right? And so again, you're right. That's our mission here. We want to educate you. We want to get you up to speed on it and also give you access to investments, because that's the other problem, is that these investment opportunities aren't available for the average investor, right?
Yeah.
Sometimes they have these huge minimums, $1 million minimum for you to invest in something. Life settlements is another one that we haven't even talked about. And I remember when we were looking into it, $250,000 was the minimum investment to get into a life settlement. And so again, just our mission here, our goal here is to really increase these opportunities, get you access to alternative investments so you can diversify your portfolio.
Yeah, really well said. And I feel like we should also talk about why everyone is just told to do index funds and chill. Why is it? Well, I think the underlying premise of this is you are not trustworthy with your money, right? That you are so emotional about it, you're not going to be able to make good decisions, or you don't have the skill set, or you're not going to spend the time to really get even a basic understanding. So therefore, it kind of it's a very paternalistic, I think, way that we are all taught to invest, which assumes that we are incapable of doing it. And I think part of what our mission is to show people they're absolutely capable of understanding money, of understanding their finances, of growing their wealth. I mean, that's really what we do with Semi-Retired MD. It's what we do with Fast Fire Capital. Biara is female entrepreneurship, but it is about building your own business. And a business and real estate are the big ways that you grow your wealth significantly. And so it's really an empowerment to not have to say like, oh, I only can go invest in the stock market because that's all I'm capable of doing. Right. And that, I really feel like that's the approach that the government, everybody's taking when they say the only way to invest is put money in your stock market and someday you'll have a comfortable retirement. It really actually kind of pissed me off. Yeah.
Absolutely. Yeah. And I wanted to bring up something that you brought up in the very beginning, which is that as we build our wealth and as we get older, then we are going to be moving into more of a protection phase. I think all of us are going to be moving into more of a protection phase. And that's where this diversification is even more important. I think it's important now, but it's even more important as you are looking to protect that wealth. You got to be diversified and you got to get into these alternatives.
And index funds is not enough diversification. I know it's sold to us as diversification. It's not really diversification. Even when you look at the index funds, like a bulk of it is is now in the technology, like the Magnificent Seven or whatever they're called. It's not even really truly diversified in a lot of different companies like it maybe used to be. So index funds are not enough diversification. And I hope people hear that there's a whole other world of alternative investments that the ultra high net worth people know about and they're actively investing in, and that most of us were never taught anything about, but it is absolutely something that you can learn. So go out there and inform yourself, understand the upsides and the downsides of every single investment, because every single investment has both. And then pick and choose what pieces you want to add to get to that 13 to 15 uncorrelated assets. Maybe not today, but maybe in 15 years, you get up to 10, for example, but you do it slowly over time, ultimately doing what fits you. And I think that's really when we first went in 2019 to our first finance conference and we were learning about all this stuff, it was like a whole new world opened up to us because nobody taught us this. And each year we've done a little bit more diversification. And I feel really good about that.
Mm-hmm.
Yeah.
Now, Josh, thank you for being our guest. Could you answer our questions that we ask everybody before we end our session? What is your definition of wealth?
Yeah, such a good question. I think fundamentally wealth is the uncoupling of time, trading time for money. Actually, when you just asked me that, the first thing I thought of was a story that Tony Robbins tells at his conferences, where he's riding up on a ski vacation. He's riding up in a gondola with some unknown billionaire. And the guy says to Tony, in the time it takes for me to get from the bottom of the mountain to the top, I will have made X amount of dollars, but a lot of money, right? And so the point being is that this guy's on a ski vacation, riding up in a gondola and still making money. And so again, I think it's the uncoupling where you're no longer trading a direct transactional trade of time for money, and your ability to continue to make money doing what you love, I think is wealth.
I love that. I forgot about that story.
Yeah.
So what is one mindset, habit, or strategy that separates someone who is wealthy versus someone who is not?
That's another good question. I think fundamentally that, and I'm still admittedly working on this myself, actually, but money is a tool. I mean, that's what it is. It allows you to, it's an exchange medium. And the way that we view money, I think fundamentally as you develop wealth and get wealthier, I think that you appreciate it more so and have a better understanding that it's more a tool than like the end all be all, right? It facilitates what you're going to do and how you're going to do it, but that's it. And I think that we live in a scarcity mindset where everybody is like holding on to everything so tightly. And I think opening yourself up to that and kind of changing your relationship with money and how it works and how to use it appropriately is a big mindset shift.
This year was the first time I heard this, but it really stuck with me is you don't get to the point that you outgrow scarcity. You have to choose to start beyond it. You have to choose to say, I'm going to start beyond this and I'm going to just have the faith that everything's going to be taken care of. Even if there's some dramatic shift in my wealth, that I'm going to have the resourcefulness to figure it out. Then so you start beyond scarcity rather than thinking, hey, I'm going to accumulate all this money and then I'm going to not feel scarcity anymore. It doesn't happen that way.
Yeah.
You have to, it's a choice you actually have to make. And so that choice is literally a choice you have to make. Like, I'm going to see money differently, right?
Yeah.
And to believe that I'm going to have all the money that I'm going to need. And I'm going to, of course, going to go and make smart investments, but I'm no longer going to live in scarcity and fear around money. And it's literally a choice.
Yeah, 100%. And when you were speaking about that, I mean, the saying that popped in my head actually was, you have to spend money to make money. And right, good, bad, or indifferent, I mean, there's truth to that. And I think that, taking educated risks, educated, thoughtful risks are important. And it really does. It's a wealth multiplier, I think, being willing to do that.
So can you tell everyone how they can get a hold of you, how they can find out more about what you're doing?
Yeah, absolutely. So first and foremost, you can go to our website, fastfirecapital.com, and we have a bunch of information on there, blog articles. We have links to educational materials that you can actually download. Some include the first one that pops to mind is to help you vet sponsors. So it's kind of it walks you through the vetting process and important questions to ask when you're making an investment. So we certainly have tools at fastfirecapital.com. And then they can, of course, email me anytime at josh@fastfirecapital.com. And I will be sure to get back to you. And from there, we'll figure out a time to schedule a meeting and we can get on a phone call or a video visit.
Thank you so much, Josh, for being with us today. That was really fun. And thank you for sharing all of your insights about alternative investments and then also your journey.
Absolutely. It was great to be here, guys. Thank you so much.